please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Then BHEl, that's the stock really that you should focus on. Those margins looked good. We're waiting for further clarity, but for the time being, the street seems to have liked what it's seen. It's up 7.5%. Remember, it's 52-week low is added on that 74-75 rupee mark. So it was closer to that end. So that could be one reason as well. But keep an eye on that stock when the market actually has moved virtually to the low point of the day. But sticking with earnings then, Mandana Retail, well, they posted a decent revenue growth this quarter. The company also reported an EBITDA profit against a loss last year. The losses have contracted a tad bit. We have with us Mr. Hemant Gupta, the CFO and CEO of the company, to discuss the company's Q4 numbers. Hi, Mr. Gupta. Thanks so much, sir, for joining in. Well, FY18, we saw revenues more or less flattish. What's the revenue target for FY19? Can we see any kind of growth?
So overall, we are looking at a growth of 15 to 20%, in which the most important part will be the like-to-like growth, which is approximately 10% we are targeting. So this year for us is the year of consolidation. So we are consolidating all the aspects of our different line of businesses, and we are consolidating this year. 15 to 20% is the overall target, and 10% is the like-to-like growth that we are targeting.
Hey man, so we are actually looking at around what, 280 to 90 crores at least in FY19?
Yes, absolutely.
Okay, we've seen a margin compression, Hemant, to the tune of about 200 basis points to come in at 8% in FY18. Should we pencil in an improvement in margins? What's the outlook looking like?
Yes, definitely, because last year was a tough year not for us but for every retailer because of the GST rollout. The USS preponement was there during last season, right? And because of that, we end up offering additional discounts to the customer. So this year, because it is going to be a normal year, so EBITDA is going to increase, and we are looking forward for at least 25 to 30% improvement in our EBITDA margins. So 11 to 12% we are targeting this year.
Hey Hemant, I'm just looking at your stock price. It's down nearly around 40%. Now, Big Bull Rakesh Jhunjhunwala held a big stake in your company. Does he still hold? Has he sold some stake?
No, definitely not. So no, he continues to be our shareholder, and there is no offloaded has been taken place.
Okay, what about your fundraising plans in FY19? Your exchange notice earlier this month indicated that you are looking to raise money via private placement or perhaps even a QIP.
Yes, we are targeting the expansion in Tier 2 and Tier 3 cities, where we are going to open our next EBOs. So yes, definitely at some point of the year, we are going to do that.
Well, most importantly, Hemant, tell us, has the contract with Salman Khan been renegotiated?
So we need to understand that our agreement is still valid till March 2020, right? And there are certain different discussions are going on the business modeling part. So we are fine-tuning that. We are in discussion with the foundation, and possibly in a few months of time, we will be able to close that also. So there are no worries as far as agreement renewal is concerned.
So is there a possibility that the contract with Salman Khan may not get renewed?
No, there is no likelihood as such that it will not get renewed, because we are already in the final stages of discussion, and it is going to be renewed soon.
The political turmoil in Italy is hurting the European market, so the benchmark indices there are down close to about 0.7, 0.8%. The Italian MIB index itself has seen a cut of about 1.7%. In latest news, the president there has rejected the appointment of an anti-Euro finance minister. There are fears of a snap polls, fears or uncertainty whether Italy will continue to remain in the Eurozone. So all that seems to be playing on the market's mind there. So down close to about 1.7% over there on the back of geopolitical uncertainty. But the infrastructure companies are turning in good numbers. We had BHEl, which reported a good margin performance. Stock is now higher by 8%. L&T too has delivered a beat on the margin front. The order inflows too for FY18 were better than what the street was expecting and the company's own guidance. S.N. Subramaniam, the MD and CEO of the company, talks about the guidance, the demand outlook going ahead. Listen in.
It's been a decent year for us, 17-18, and we look to 18-19 with a fair amount of optimism. So we have given a guidance of between 10 and 12% for order inflow growth and between 12 and 15% for sales growth. And we're fairly confident that this is possible as we look into the year. Some extent of revival of capital aggregation in some of the core industries, which leads to the fact that investments are being sought out. More important also from our point of view, we see buoyancy in some of the other geographies that we are present in. In Middle East, probably due to the fact that oil prices are high and last 1 or 2 years had not seen too much of capital spend, we do see the requirements of capital spend both on the hydrocarbon side as well as on the core infrastructure side. We do notice multilateral and line of credit spendings in the continent of Africa and a fair amount of developmental activities in Far East.
The stock we're looking at, remember, in fact, the stock has spiked to the high point of the day as we speak. Anisha just told us that margin beat was something she liked. Anisha, any more details?
Well, yes, margin beat on the looks of it looks really strong, 12% versus our expectation of around 7-8%. So that does look healthy. But Nigel, there is no way to say that this is the core performance that has actually gone better, because if you look at the other segments of the company, the power segment as well as the industry segment, the EBIT in both of these segments has actually gone down. For the power segment, EBIT is down 20%. The industry segment, the EBIT is down 78%. So I'm not really sure of what is driving this EBIT performance, because as we were talking earlier as well, the employee expenses is up around 80%. Yes, there is a reduction when it comes to the other expenses, and even the cost of material looks steady to me. But very important to wait by for the management commentary on the same, because it is difficult to say how that has performed. Talking a bit about the order inflows as well, because the order book stands at 1,18,000 odd crores. Now, if you look at quarter on quarter, it has gone down because it was 1,22,000 odd crores. I checked my notes, that was around 1,22,000 crores at the end of quarter 3. They have packed around 12-13,000 crore worth of order, which they have announced to the exchanges. Remember, for the entire year, they need around 35-36,000 crore worth of order inflows to meet their guidance. So important to see whether that happens or not, because order inflows also is one thing that we'll have to wait by for management commentary, because I was talking to a few analysts and the expectation is that some of the stalled orders might have gone off the order book. So that's something that we need to watch out for. The con call is at 4:30 p.m. Important explanations are likely to come in that. I'll keep you updated on what comes from it. Back to you.
It's time now to tell you what's happening in the world of commodities. Manisha Gupta joins in as always. Hi Manisha, what do you have for us?
Oh, plenty. Starting with the crude oil prices first, where a second time zone has begun, and we still have the same divergence in both the crude varieties, where you have seen the Brent prices trade on the higher side while the US crude oil prices are trading on the weaker side. So it is really about the premium that the Brent commands over not just the US crude oil prices, but whether it is the Russian Ural or the Dubai crude oil prices. The Brent actually is trading the highest in the global markets right now when it comes to that variety. Well, of course, there's plenty happening in sense of events and data which the markets would keep an eye on. But the biggest of them all is the 22nd June Vienna meeting, when OPEC and allies meet and decide on the future course of supplies and prices onto that one. Metals also demand a mention, because we have seen nickel prices continue to gain up on the higher side. We did see Shanghai open 2.5% higher for nickel. It is also in case of the LME that we have the nickel prices trading 2% up. It is about the steel demand, which is quite on the stronger side. Actually, if you look at the numbers since the month of March, you have seen the steel inventories decline by 40% and the prices have gone up by 15%. And that clearly shows in all of the steel components. So whether it's iron ore or nickel, we have seen strength continue for most of them. Sumit Bagaria of Choice Broking now joins us with strategies in therein. Sumit, hi. Let's start with nickel first, and that seems to be the only metal that continues to outperform, up nearly 8 to 9% in this month, and has been the best performer for 2018 too.
Hi Manisha, good afternoon. Well, yes, you are absolutely right. Most of the metals are still looking strong to me. And as far as your question on nickel is concerned, well, the commodity is looking strong, and from here on, we are expecting a good upside move. The commodity is quoting at around 1010, that means 1010 levels, and from here on, there is a possibility, if we see closing above 1020 levels, then there is a possibility that we might see move till 1080, 1100 levels in next couple of weeks. So overall, the bias is positive. If there is any dip or a correction from present levels, then that should be used as a buying opportunity. In fact, one can go ahead and initiate long positions at the market price too, with a stop loss to be placed at 985 levels on lower side for the upside target of 1040 and 1080 levels in next couple of days or in next 1 week to 2 weeks time horizon.
Sumit, it's quite clear on what the Indian markets follow when it comes to the global crude oil prices, and that is Brent. With the strength in Brent, we also have seen the Indian crude oil prices trade on the positive side today. What is your sense with the kind of profit taking that we have seen come in for last 3 or 4 sessions? Are you looking at consolidation? Are you accumulating, or it's still a cautious period?
Well, see, after a correction of around couple of days, now it's time where one should again initiate long positions because it has major support at around $65, $66. NYMEX crude has supported around $65, $66. Till the time these levels are not taken away, we will see a bounce back from these levels. And if the bounce back is able to cross $70, then we will again see a good upside move in the commodity. For a trading perspective, I think one should initiate long positions in crude June contract at around 45.10, 45.30 levels. For the upside target of 46.40 with a small stop loss to be placed at 44.60 levels on lower side.
Sumit, coming on the precious metal space as well, where we have seen the gold prices still trade below $1,300 per ounce, but silver definitely seems to be looking at some buying attraction there. Are you buying at these levels? What is your sense on the range going forward?
Yes, you are absolutely right. We are expecting upside move in silver. It has not performed well in the past, but now looking at the chart, it seems that from here on, we will see a good upside move in which in a positional trade we can see levels of around 42,000 or 43,000 levels. As far as a trading bet is concerned for next couple of days, I think one should initiate long positions at the current market price or on dips in prices till 39,900 should be used as buying opportunity with a small stop loss to be placed at 39,700 on lower side for the upside target of 45,700 levels in next couple of days. And if we take a positional trade, then we are expecting silver prices to move up and touch levels of around 42,000 or 42,500 levels.
Okay, all right. Thanks so much, Manisha, as well as Sumit for joining in and running us through all those strategies. Well, keep an eye out on BHEl. The stocks moved to the high point of the day. They've given details in terms of the orders that they booked in the last year. That's up by nearly around 74%. We're still trying to decode while, in fact, the stock has moved to the high point of the day. That could be one of the reasons. And they've given up the breakup as well. They're saying the FY18 order book at around 1.18 lakh crore. That's the highest in the last 5 years. So I think the street is taking away that there is some kind of visibility going ahead as well. So we'll keep an eye out on that front. At first glance, we thought maybe in fact the margin improvement was something that the street liked, but that as well we'll have to get an idea in terms of why the other expenditure was nearly around 800 crores lower when you have a flat top line. So more details awaited. For the time being, the stock has rocketed high point of the day. We'll wrap up on halftime report.